Hey, how's it going, everyone? I hope you guys all had a green day today if you traded. I'm going to go over today's daily plan. We're going to take a look at today's intraday order flow, right? That's what we're looking at here. This is a footprint chart. If you're unfamiliar with them, go to the home of the YouTube channel. I have a video that goes over how to read these. But what we're looking at is transacted volume. We're taking a dive inside of the candlesticks. So, we have a zero print up here. These red, these are selling imbalances. And so we see sellers are here, and we see a zero print. What does that mean? That means zero contracts were transacted to the sell side here. No one sold. And when no one wants to transact up here, the auction is done. We're going to go down then. And what do? Well, we go down. But where? We have to go. Price is happy to trade. Price is going to go where people are happy to trade. So let's look left. Look at this. There's a lot of contracts right here. Price goes to it, and we see these volume notes build out. You see how big they are? 24,000 contracts, 22,000 contracts, 18, 15. You get the point. But as we continue down, we see what? Another zero print. No one is willing to transact down here. We're going back up to where people are happy to transact. I think you guys get the point, correct? So we're going to go over the makings of my daily plans. Every morning I start here with my TPO charts, time price opportunity charts, market profile charts. You hear them referenced, all those different things. So I look at what the overnight session does, or did rather. Every morning I don't trade the London session, also called, because, well, I got to sleep sometime. So what do we get from this? We look here to see what the current market auction is saying. Do we have values overlapping, value area highs, value area lows, where are points of control lying? What do the bottoms of the profiles look like, the tops? What do the shapes of the distributions look like? A whole bunch of things that we could take to help build our knowledge on what's going on in the current market auction. And we got to remember this. So we go from here, we go to our other tools and build confluence between these tools is how we create our daily plans. So from here, I go to my absolute favorite time frame. What we were just looking at, the 4-hour chart. I'm a day trader, and I believe that 4-hour charts, especially the footprints, is able to give us the most useful information, right? And what are we looking at? Similar to what we were just looking. So I'll come in the morning and I'll annotate everything I see, whether it be, the auction is done to the top side. We have a huge offer here. We just ran seller stops. We're going down. Or in reverse, maybe we're trending and we have an active bid at trend or moving averages. We have a significant offer. We have a significant bid, passive seller, trapped volume. We have, gaps where we don't really have volume traded. All of these different things mean different things, and you have to make sure you're cognizant of this. So, for the people who are learning order flow, I'll mark this up. I'll send it in the Discord, and from there, I do this exact same thing, but now on the daily chart. So, I usually look at the past 3, maybe 4 days, depending on if I find them relevant. And again, it's the same exact thing, just annotating. Do we have a significant bid somewhere? Do we have a significant offer? All of that stuff. So that's the 3 steps usually that my daily plan is or consists of. And from there, we'll go to my actual live reading. So I try to be more active today on StockTwits as well as YouTube. I post the same things between them. But let's take a look. So this is the daily. Got to rewind a little bit. So at 7:52 a.m., I should bring up actually my 5-minute. Let's look where we're trading at that time. So we could see, or maybe I can clean this up so we could see better. Just after 6 a.m., we started to trend down pretty heavy or heavier. As we could see, right? We're just respecting moving averages, trending down. Very aggressive sell. Now, actually, I should bring up as well the 30-minute chart because it looks even more aggressive there. We look at a clean candlestick chart and look how aggressive this is, just non-stop selling. All right, at 7:52, I post on StockTwits and YouTube. Bulls want 64 to 67s to hold, should provide at least some bounce is what I meant to say. Let's see. Um, and it did. It provided that 5 points that I wrote there, but it actually went, I think, 7 or 8 points. So where is my cursor? There we are. 752 would be then in this candle here. So we're trading at the lowest point, 66s. So I'm saying 64 or do I get that right? No, it would be in this candle. So at the lowest point would be 67. So I want 67s to 64s to hold. And sure enough, they do. I actually posted a picture, of it going up. But what I'm trying to get at here is that with order flow, we see a bid is here. We see this huge selling, and we know to stay on the sidelines. Where is that picture? Right? Want this to hold. And you can see not even one 30-minute candle closed below. This bid came in, exhaustion at the lows, and went. Now there's context behind this, why we knew that this level structurally was a key level that bulls needed to hold for us to not, continue selling down. So I did end up taking a trade off of this logic. I posted it. Where is it? Right here. So right after open, right here, you can see my fill. Took it here. 90% off at 5 points. I was looking to go all out a little bit higher, but I'll stop the rest at my break even plus 1 tick just to account for any slippage that I may see. What other pictures do we have here? So this was the bid that was coming in the morning, right? We see a B-shaped profile. We see exhaustion. We see large buying imbalance, right? 10,200 contracts bought up here compared to the 86 contracts that were sold here. That is complete exhaustion. Look at the difference between those numbers. It's huge. So signs are looking there, looking good. That's the trade. We should look at this. So I took that trade that we just looked at here, but I wasn't the only one who took it. A member took it as well. And they're having their best week, so that was nice. And then they ended up taking a short, which this was the high day for a couple hours, I believe, as we saw in the beginning of the video. We're trading above it now. Took another 5 points, and I believe that is it from here. All right, let's get this out of here. So, let's bring up the 30-minute chart. We see this bid here, right? When this candle closes, look at this volume. It's all trapped. This candle opens, retests this volume. They're trapped. They provide a floor. And we continue up, close up here, trap all of this volume, rinse, repeat, test, up. Come back to trend, buying in balance, stop run of buyers. These trap participants provide a floor, and we just continue up, rinse, and repeat. So if this method or this approach makes sense to you and you want to learn it, I'll leave a link to my website in the description. If not, I'll see you guys on Tuesday. We're not trading Monday, holiday, so I'll see you guys probably Tuesday, maybe Wednesday.